A very good afternoon. Let's take a look at the markets. Asian markets traded mostly higher today, tracking Wall Street's surge to a fresh record high following upbeat economic indicators and a mixed performance in terms of the quarterly earnings results coming out from US companies. Japan's Nikkei average bucked the trend though, as players there awaited the outcome of some local elections. The Nikkei share average ended the session in the red, down 0.21%. The Hang Seng Index advanced by 1.3%, while the Shanghai Composite Index rose by 0.5%. US markets surged ahead last night, with the S&P 500 reaching a new closing record. Key data releases on Thursday showed some strength in the American economy, with the Labor Department reporting that initial jobless claims for the week ended July the 12th came out at 221,000. That's a decrease of 7,000 on the previous week. On top of that, June retail sales numbers were reported up 0.6% on May's levels, showing that consumers seemingly remain resilient. The Dow Jones Industrial Average rose by 0.5%. The S&P 500 closed up by 0.54%, while the Nasdaq Composite Index advanced by 0.75%. Looking at local indicators, we see that the All-Share Index is currently up 1.3% at 98,591 index points, doing very nicely there. And the Rand is trading at 17.68 against the US dollar, 20.57 vis-a-vis the Euro, 23.78 against the British Pound. Gold is trading at $3,350 an ounce, platinum at $1,470 an ounce, while Brent crude oil is trading just above $70 a barrel. All right, let's get back into it with Warrick Lucas. He's the head of private clients at Vunani Securities. Thanks very much for joining us, Warrick. So what were the highlights and lowlights on global markets this week? And presumably the local market is just following the global market trends, but doing quite nicely today.
Yeah, I would say highlights are that we've seen US markets continuing to run at high levels, and even if there's been a bit of noise amongst earnings, well, I think tech earnings and retail sales have ultimately proved to be sufficiently supportive. And as far as global equities are concerned, well, I mean, they've generally been rebounding sharply since April on the bigger picture that trade tensions may moderate, even if things have been a little bit noisy since the 90-day deadline. We saw, I think, not only US tech, but also Chinese tech rallying quite a lot there on NVIDIA's intent to resume its H20 AI chip sales to China soon, they say. And I guess, I mean, that's pretty good news. And I think it's good news geopolitically as well, hopefully taking some tension off the table on the South China Sea. Lowlights, well, you know, our position as a G20 chair has made us a bit of a target in Trump's worldview, so often we look a bit edgy when he's having a bad hair day. But local markets have broadly mirrored global trends. Persistent threats of new tariffs from Washington obviously tend to lean on local sentiment. We had some bad news from motor industry exports, and general GNU grumpiness also leaned on. But all in all, I think global sentiment, yes, tending to lift our boat as well.
Well, thank you for those balanced comments. It's quite confusing that we should see US markets advancing when there's still so much uncertainty around the tariffs issue.
I think investors appear to expect that, you know, tariff threats will be moderated or delayed. Again, as has happened in past cycles, you know, I mean, the market calmed down after the April correction when they decided to believe that the can, you know, would be kicked down the road again after lots of noise. And I think it's reasonable to suspect that that's the position that's being taken here as well. So, yeah, all in all, I think the market really just pricing in a kind of a muddling through scenario rather than a full-blown crisis.
Yeah. So you touched on the G20. We've had the finance track meetings that have been going on in Durban. That is the meeting of global central bank governors as well as finance ministers, with our Enoch Godongwana and Reserve Bank Governor Lesitja Kganyago hosting these guests in Durban. But I wanted to ask you, what are you expecting to come out in terms of policy, and to what extent do you feel that because the US has not been engaging, these sorts of things are negated somewhat?
Okay, so I think as I stated in the beginning of the year when Marco Rubio refused to attend the initial G20 meetings, and the US has turned inward, and frankly, nothing's really changed on that score, and everyone really just needed to box on without them. And I think that's still absolutely true today. I mean, they have sent some representation, but not as senior. I mean, also the G20 stated goals are solidarity, equality, sustainability, which are not typically American values anyway, and certainly not Trump governments. I mean, as far as tariff discussions, I mean, they have dominated proceedings, but they have also included the key African issues such as debt restructuring, climate finance, and cross-border payments. And so, I mean, while the US didn't visibly attend, I mean, officials were reportedly engaged in background discussions, as one would expect and hope. So I think that the lack of US visibility might affect the optics, but I think there's been some substantial multilateral progress, and I think that's what you wanted to achieve. I mean, ultimately, I think we want a fair deal for Africa on debt, and I think there might be some progress towards that. And in any case, the US absent at the G20 gives other countries an opportunity to decide and or demonstrate if they're going to step into the gap. And I think to some degree that is occurring.
Yeah, no, absolutely right. Thank you so much for your time and insights, Warrick. That was Warrick Lucas. He's the head of private clients at Vunani Securities.